Hey everybody, Stephen Sitkowski here, founder of the Sitkowski Trading Academy and leading educator on how to trade the financial markets. This is the craziest party that I've ever seen, in the words of Three Dog Night. Do you realize the NASDAQ is only 2% off of where it was at the beginning of the year? Is that insane to think about? Now, it's not 2% from its highs, but I mean, the market for the year is only down, the S&P, like 10% at this point. So let me show you a couple of trades that I recently got involved in. And let me also say that this is not investment advice. I'm not suggesting you run out and take these trades. I have no idea your suitability, but again, this is educational purposes only. Let's start by looking at a chart on the S&P 500. Then I'll dig into those trade ideas. So when we look at the SPY, which is a proxy for the S&P 500, pretty simple to see what's been going on, right? There you go. Right? Market is moving higher. We are above the 30-day moving average. See, the volume comparatively has been up, and MACD is green, RSI, everything looks bullish. Now, again, I keep reminding you, this is a news-driven market. This is not an earnings-driven market, a revenue-driven market. It's a news-driven market. So the good news is it feels like, at least for now, we're getting our arms around this whole coronavirus thing. President Trump keeps talking about, we got to get Americans back out there working. Americans love to work. I'm working from home, but I'm working, and a lot of you are doing exactly the same thing. But in any event, I know what he's talking about. Let's get the marketplace back open, all that good stuff. And I mean, that'll be awesome when it happens, when we're able to do that safely. But I mean, reality is GDP is going to be down probably 5.5%, 6% for the year. We are going to take a hit financially. And I know the Fed and the Treasury are just throwing money at it like there's no tomorrow, but there will be a tomorrow. So I am cautious. And I also want to be in harmony with sort of the times. So things that, people can do from home, things that won't be hurt as bad from this type of an economy. So obvious one, and I've done trades on this before, is Teledoc, right? This distance healthcare. I think it may become the norm. But, you look at the chart on Teledoc. Now, we do have a bit of a breakout pattern on it. So I took, anytime you see these converging lines, that's a breakout. So it could have a pretty significant move. So I wanted to do something very conservative. So this is what I did. And then I'll give you the exact numbers on it. So let me get some more strike prices. So if you look out a month, May 15th expiration, I bought a 120, that's wrong, 125, let me consult, strike call, and I sold the 140. Okay, so basically what I'm doing in this trade is I am banking on Teledoc to stay above $140 a share. Well, it's sitting at 160, and I'm expecting it to stay above 140 for the next month or so, okay? If it does that, the numbers are as follows. So I paid $10.95 for the trade. Now, the way that you figure out maximum profit is the difference between the two strikes, which is, let's see, 140 to 125, that's 15, minus the 1095. Maximum profit is $4.05. My risk is about $11, so the return on that is nearly 40%. So to make 40% for the month, I need Teledoc to stay above $140 a share. Now, before you put on spread trades, you need to understand how to monitor the trade and how to get out of the trade in the event that this thing suddenly starts screaming down. But once you know how to do that, and trades like this are awesome, awesome. Taken lots of these types of trades here in the last 6 or 8 weeks. All right, let me show you one more. And this was on Equifax. This is even more conservative. By the way, the statistical probability of that trade working in our favor is about 75% based on the delta. This one is like 82%. And here's the chart on Equifax. Look how good that looks. I mean, that is beautiful. So what did I do on this? I bought the 570, strike call. I sold the 590. So now I just need this stock to stay above $590 a share to expiration to make a maximum profit. I paid $17.29 to get in. Maximum profit is $271 for a return of, in this case, about 15%, as long as the stock stays above 590. I mean, this thing could drop virtually 100 points. And I'm still profitable. So the probability of profit on that one, yeah, 82%. I don't know. Look like pretty good trades to me. Again, I'm not suggesting run out and do it. If you don't understand what I did, you sure as hell shouldn't take this trade. But if you want to learn, right, how to be able to do this, you got to come to one of my classes. I just finished a 2-day workshop. We did it live virtual. The class loved it. It went fantastically well. And you want to learn how to be a good trader? And we'll do another class sometime in May. But just shoot me a note here on YouTube and I'll get you some more information. All right, so that's it for now. Stay safe, be healthy, keep your distance from people. When you go out, wear a mask. Look, if we're smart, we can get past this sooner rather than later. So till next time, God bless. Remember, we're on this together. Beautiful thing is there's still opportunity in the market. Bye-bye for now.